Hello, friends. Welcome back to the channel where we decode the minds behind the markets. Today, we're diving into one of the most powerful and unconventional books ever written on trading psychology, Market Mind Games by Denise Shull. Now, this book, it's not your typical trading manual. It doesn't talk about charts, indicators, or secret formulas. Instead, it takes you on a deep journey into your own mind because that's where the real battle in trading happens. Denise Shull, the author, is not just a trader. She's a neuropsychology expert, a Wall Street veteran, and a performance coach to elite hedge funds managing billions of dollars. Her big insight? It's not fear or greed that ruin trades. It's the misunderstanding of your own emotions. This book shows us how to stop fighting our feelings and start listening to them, how to turn emotional chaos into psychological clarity, and how to develop a mindset that's not just profitable, but powerful. So stay tuned as we break down each chapter in a voice that speaks to both your brain and your heart. And if you find value in this video, don't forget to like, share, and subscribe to the channel for more such insightful summaries. Let's begin the journey into the mind of the market, and more importantly, into the mind of the trader within you. Chapter 1, From Wall Street to the Ivory Tower and Back. Denise Shull opens the book with a personal reflection on her journey, one that moves from the chaos of trading floors to the quiet depth of academic research. She began her career in the fast-paced world of Wall Street, working as a trader. Like most people in finance, she believed that success came from discipline, logic, and removing emotion from the equation. Markets, after all, were supposed to be about numbers, strategies, and probabilities, not feelings. But real-life trading didn't follow that clean, logical path. Denise observed firsthand how even experienced traders would freeze, panic, or make irrational decisions. She saw them react emotionally to uncertainty, hesitate when they should act, or act impulsively when they should be patient. Something didn't add up. If everyone had the data, the strategies, and the training, why did so many still fail? This question led her away from Wall Street and into academia. She enrolled at the University of Chicago to study neuropsychoanalysis, a field that combines neuroscience with the insights of psychoanalytic theory. There, she explored how human beings actually make decisions, especially under uncertainty and pressure. She dove into the emotional architecture of the brain, studying how feelings, memories, and unconscious patterns shape the way we perceive the world. What she discovered challenged the very foundation of financial thinking. Traditional finance assumes that human beings are rational actors. But neuroscience shows the opposite. The brain doesn't make decisions through cold logic. Instead, every decision starts with an emotion. Before the rational brain can even analyze a situation, the emotional brain has already responded. This emotional signal, which includes fear, anticipation, doubt, or excitement, colors how we interpret what we see. Denise realized that traders don't fail because they're undisciplined or unskilled. They fail because they misread or ignore their emotional signals. They believe that emotions are distractions, something to suppress or eliminate. But in doing so, they blind themselves to critical information. Emotion, she explains, is not the enemy. It's data. It's part of the internal system the brain uses to assess risk, detect patterns, and make sense of ambiguity. This insight became the foundation of her philosophy. To succeed in markets, one must understand their own mental and emotional processes. Traders need to become fluent in their feelings, not ruled by them, but not ignoring them either. Self-awareness becomes a competitive edge. Denise sets the stage for a radically different approach to trading, one that doesn't pit logic against emotion, but blends them, one that doesn't ignore human nature, but leans into it. By telling her story of moving from Wall Street to the academic study of the brain, she invites readers to begin their own journey, not just through markets, but through the emotional truths that govern how we act inside them. Chapter 2, Numbers Look You in the Eye and Lie. In this chapter, Denise Shull takes direct aim at one of the most sacred assumptions in trading, the belief that numbers are pure, objective, and reliable. She argues that this belief is not only false, but dangerous. Numbers may appear neutral, but they are always interpreted through human perception, and that perception is deeply emotional. She explains how traders rely on data, charts, earnings, price levels, and historical statistics to guide their decisions. But what they don't realize is that their brains aren't just reading the numbers. They're reacting to them emotionally before they even process them rationally. Every piece of data is filtered through memories, past experiences, personal fears, and subconscious expectations. For example, two traders can look at the exact same chart and see two completely different things. One might see an opportunity, the setup for a breakout. Another might see a trap, a repeat of a past loss. The data didn't change. What changed was the emotional lens through which it was viewed. Denise supports this argument by drawing on neuroscience. She explains that the emotional system in the brain, particularly the limbic system, activates before the neocortex, which handles logic and analysis. This means that even if we think we're making rational decisions, we're actually responding emotionally first and then justifying our decisions with logic afterward. This process happens so fast and unconsciously that most traders don't even notice it. But it has serious consequences. A trader might be feeling anxious from a previous bad trade, and without realizing it, they might interpret a neutral market move as dangerous. Or a trader who's feeling overconfident might dismiss valid warning signs and double down on a risky position. Denise stresses that this emotional distortion of data is not a flaw. It's how the brain is wired. The problem is not that traders feel emotions. The problem is that they don't realize how those emotions are influencing their interpretation of the numbers. She urges traders to stop pretending they're robots and start recognizing that feelings are part of the data stream. When you read a number, you are not just seeing it, you're feeling it. And that feeling shapes what you believe it means. The key is not to eliminate emotions, but to become aware of them, to question what you're feeling and why, and to see how that might be affecting your read of the market. The chapter closes with a clear message. The markets don't move on facts. They move on perceptions of facts. And perception is never neutral. It's always emotional. If you want to truly understand what's happening in the market and in your own decision-making, you need to stop worshiping numbers as truth and start understanding the emotional stories behind them. Chapter 3. Misremembering the Caveats of the Early Quants. Denise Shull begins this chapter by peeling back the history of quantitative trading, the rise of using mathematical models to predict market behavior. The early pioneers of quant finance were brilliant minds, many of them physicists or mathematicians who brought sophisticated tools into the financial world. But here's what most people forget. Those early quants knew the limitations of their own models. They understood that markets were not physical systems. Unlike particles or equations in a lab, markets were driven by human beings, emotional, unpredictable, and complex. The models were useful, but they were never meant to replace human judgment. They were approximations, not absolute truths. However, over the decades, something changed. The caution that once accompanied those models was lost. The industry, chasing performance and control, became overconfident. Denise describes how traders and institutions slowly began to treat mathematical outputs as reality, trusting the numbers more than their own intuition or experience. In other words, the models went from being tools to becoming truths in the eyes of many. This shift created a dangerous illusion, the belief that risk could be tamed, predicted, and even eliminated with enough data. But in reality, human behavior, which drives markets, doesn't follow clean formulas. Emotions, beliefs, memories, and reactions don't fit inside a spreadsheet. And when models ignore these psychological elements, they become blind to what actually moves prices. Denise argues that the financial world has, in a way, misremembered the warnings of the original quants. We forgot their humility. We forgot their caveats. And in doing so, we replaced awareness with overconfidence. She gives examples where traders followed models into disaster, not because the math was bad, but because they ignored what the model couldn't see, the human side of the market, the panic, the herd behavior, the fear that spreads before numbers can catch up. The core message of the chapter is a powerful one. No model can predict human emotion. And if you're making decisions based purely on math, you're blind to the most powerful force in the market, the psychology of participants. Traders must return to what the early quants knew. Models are guides, not gods. They're only as good as the trader interpreting them. By calling for a balance between quantitative tools and psychological insight. A trader who understands both the math and the mind has a significant edge. But those who worship numbers and forget human behavior are setting themselves up for surprise, and not the good kind. Chapter 4. Seeing what we want but missing the obvious. Denise Shull dives into one of the most deceptive forces in human perception, perceptual blindness. This isn't about failing to look. It's about looking directly at something and still not truly seeing it. She explains that our brains don't perceive reality in an objective, neutral way. Instead, our brains are constantly predicting, assuming, and filling in the blanks, often based on what we already believe or emotionally expect. This phenomenon becomes especially dangerous in trading. Imagine two traders staring at the same chart. One sees a clear breakout. The other sees a potential reversal. They're both looking at the same price action, same candles, same indicators, but their minds are telling two completely different stories. Why? Because the chart isn't just being read by the eyes, it's being interpreted by the emotional brain, which is influenced by past experiences, unconscious biases, and current emotional states. Denise brings in neuroscience to explain this. The brain, she says, is a prediction machine. It uses patterns from the past to guess what's happening now and what will happen next. This saves time and energy, but it also creates blind spots. We're more likely to see what we expect to see than what's actually there. Take, for example, a trader who just suffered a painful loss. That emotional wound leaves a residue. The next time they're in a similar setup, their brain might subtly, even unconsciously, filter out bullish signs and focus only on potential threats. Their fear distorts their perception. On the other hand, a trader riding a winning streak might ignore warning signs, blinded by confidence. Denise stresses that this isn't a flaw, it's how the brain evolved to keep us alive. But in modern environments like markets, where nuance matters, this filtering becomes a liability. It's not enough to analyze the market. You have to analyze yourself and ask, what am I seeing, and what might I be missing? She offers a powerful insight. Perceptual blindness often hides in overconfidence. When we believe we know what's happening, we stop questioning. We stop looking for what doesn't fit. And that's when we get blindsided. The biggest losses often don't come from total uncertainty. They come when we're sure we're right, and we're not. The antidote, according to Denise, is emotional self-awareness. By recognizing your emotional state, whether it's fear, hope, frustration, or greed, you can begin to notice how it might be shaping your perception. This awareness helps you pause, reassess, and maybe even catch the obvious signals that your brain was filtering out. She challenges traders to not only study charts and news, but also to study their own expectations and emotional triggers. Because in a world of rapid decisions and high stakes, what you miss matters more than what you see. Chapter 5. Rolling out of the Midwest back to Wall Street. Denise shares a powerful shift in her journey, her return from academic life in the Midwest back into the heart of finance, Wall Street. But this time, she wasn't coming back as a trader chasing numbers. She returned with a new mission, to help traders decode their emotions and understand how their inner world affects their performance. Armed with years of studying neuropsychology, Denise had realized something that most traders still hadn't, that emotions aren't distractions. They're signals. But in the high-stakes, high-speed world of hedge funds and trading desks, emotion was still treated like a weakness. Traders were trained to stay disciplined, stay logical, and suppress feelings. That mindset was costing them big. So Denise started working directly with traders, portfolio managers, and hedge fund leaders, not by teaching them new strategies or technical analysis, but by helping them understand what they were feeling. She helped them pause and reflect on why they were hesitating before a trade, why they were suddenly aggressive or overly cautious, or why they couldn't pull the trigger even when their strategy said go. And what she found was consistent. It wasn't emotion that caused the problem. It was the confusion around emotion. Traders were trying to ignore their fear, their doubt, their overconfidence, but those feelings didn't just disappear. Instead, they quietly hijacked their decision-making from the background. Denise emphasizes that when traders suppress emotion, they lose access to critical data, emotional signals that are telling them something about risk, uncertainty, or even an opportunity. She compares it to ignoring your dashboard while driving. If the engine light is flashing but you cover it up with tape, you don't solve the problem. You increase the odds of something going wrong. So Denise began reframing how traders viewed their emotions. She taught them to identify, name, and interpret their feelings instead of denying or fighting them. A feeling of hesitation? Maybe it's a gut-level alert that something doesn't align. A wave of anxiety? Maybe it's not irrational. Maybe it's a sign of an unresolved pattern from a past trade. One of her biggest insights in this chapter is that emotions often come from memory. You might think you're reacting to the market in front of you, but your emotional response might actually be rooted in something from last week or 5 years ago. The brain links situations together emotionally, and unless you become aware of those links, your reactions might be out of sync with the present moment. Denise makes it clear, if you want to trade at your highest level, you can't be at war with your emotions. You have to learn their language, because your feelings, especially the uncomfortable ones, might be the most honest feedback you'll ever get. Emotion isn't the enemy. Misunderstanding it is. Chapter 6. Do you need to be psychic to deal with uncertainty? Denise opens this chapter by confronting a common fantasy that floats around trading circles. The idea that top traders are somehow psychic, that they just know what's going to happen. But she's quick to dismantle this myth. The truth, she says, is far more grounded. Great traders aren't psychics. They're just emotionally fluent in uncertainty. They don't need to be certain. They don't panic in ambiguity. They've trained themselves to stay emotionally centered while not knowing. And that's rare, because most of us are wired to hate uncertainty. Denise brings in neuroscience again. Your brain's default mode is prediction. Every second, it's trying to guess what's coming next, where the market's going, how others will react, whether it's safe to act. And it doesn't do this logically at first. It does it emotionally. Your brain pulls from past experiences, from memories and feelings, to create a gut-level prediction. Here's the catch. If you've had painful or scary experiences with uncertainty, say, a big loss on a trade you weren't sure about, your brain will associate uncertainty with danger. And that emotional tag can skew every future decision. You'll hesitate, you'll second guess, or worse, you'll rush into trades just to escape the discomfort of not knowing. That's the real challenge. So Denise's message here is powerful. Your ability to tolerate uncertainty without forcing clarity is a competitive edge. The traders who succeed aren't guessing better. They're feeling better about guessing. They recognize the discomfort of not knowing, and they stay present with it instead of reacting blindly. She encourages traders to tune into their emotional responses to ambiguity. If your heart races when there's no clear signal, if you get impulsive when you're unsure, that's not just stress. That's information. It's your mind trying to protect you. But if you don't understand it, it'll protect you by pushing you into bad trades or freezing you out of good ones. Instead of chasing certainty, Denise advises, learn to notice your feelings about not knowing. Ask, what am I feeling right now? Is it fear? Is it urgency? Is it just the discomfort of being in limbo? Once you name it, you gain power over it. She also highlights how traders often confuse confidence with certainty. But real confidence, she says, is feeling capable even when the outcome is unclear. It's not about knowing what will happen. It's about knowing you can handle whatever does. So no, you don't need to be psychic to deal with uncertainty. You need to be self-aware, emotionally tuned in, willing to sit with doubt, listen to it, and make decisions that honor it without being owned by it. Because at the end of the day, markets are uncertainty. And if you can become comfortable in that space, you're already ahead of most. Chapter 7, Ambient, Circumstantial, and Contingent Reality. Denise Shull goes deeper into how we perceive reality and how slippery that reality can be, especially in the world of trading. She introduces a powerful concept. There isn't just one objective reality when it comes to markets. There are multiple layers of reality. shaped by your emotional state, your recent experiences, your surroundings, and even the time of day. And whether you realize it or not, these variables are always influencing how you interpret market signals. She breaks it down into 3 types of realities. 1. Ambient reality. This is your emotional background noise. It includes things like whether you slept well, how stressed you are, what kind of day you're having in general. It's the mood you bring to the screen before the market even opens. And that mood colors everything you see. 2. Circumstantial reality. These are your more immediate conditions, the recent trades you've made, the news cycle, your P&L status. If you're coming off a loss, for instance, that circumstance will affect how you perceive new opportunities. You might see threats where there aren't any, or grasp at setups out of revenge. Number 3, contingent reality. This is the future you expect to happen, based on what's going on now. It's shaped by both ambient and circumstantial realities. It's your emotional projection into what you think is coming, and it affects the decisions you make in the present. Denise explains that your brain is constantly flipping between these layers, often without your awareness. You might think you're just reading the chart, but your reading is never clean. It's always filtered through these personal, emotional layers of reality. This is why traders can have totally different interpretations of the same situation. It's not just about strategy or skill. It's about what each trader's brain and body are bringing into that moment. Memories, emotions, beliefs, energy levels. That's the ambient, circumstantial, contingent blend in action. And here's the key insight. Most mistakes in trading don't come from bad analysis. They come from being unaware of which version of reality you're in. For example, if you're trading in a state of anxious ambient reality, you'll likely see more risk than there is. You'll doubt yourself unnecessarily. Or if you're in a euphoric circumstantial reality, maybe after a big win, you might become reckless, seeing setups that aren't truly there. Denise doesn't suggest eliminating emotion or trying to become perfectly objective. That's impossible. Instead, she encourages traders to become aware of their own emotional environment. Just like you read the market environment, volatility, trend, volume, you should also be reading your internal environment. Ask yourself, what kind of emotional state am I in right now? What recent events might be influencing how I see this setup? Am I reacting to this trade or to something that came before it? By asking these questions, you can start distinguishing between the market's signals and the noise your own brain might be adding to the picture. Because perception isn't fixed, it shifts. And if you're blind to those shifts, your trades will reflect that confusion. But if you understand how your brain constructs your version of reality, and you watch it as closely as you watch your charts, you'll see more clearly, act more consciously, and avoid the traps that catch most traders off guard. Chapter 8, Perception's Labyrinth. In this chapter, Denise Shull invites us to step inside the most complex, most deceptive place in the trading world, our own minds. She likens the human mind to a labyrinth, a twisting, turning maze where thoughts, emotions, memories, and beliefs collide and tangle. And in this maze, perception isn't just distorted, it's actively reshaped. What we think we're seeing in the market, it's often just a projection of what's happening inside us. At the heart of this labyrinth is fear, particularly the fear of loss. And Denise doesn't sugarcoat it. Fear doesn't just hold us back. It rewires how we interpret reality. A trader scared of losing won't see opportunities. They'll see threats. A trader stuck in regret from a previous mistake won't see the chart for what it is. They'll see the shadow of their past. And that's how many traders end up stuck in mental loops. They're not making bad trades because they lack knowledge. They're making them because they're caught in patterns like overreacting to losses and playing too safe afterward. Getting attached to a bias and refusing to admit it's wrong. Chasing trades out of FOMO instead of clarity. These loops aren't rational, but they feel real because the emotions behind them are real. Denise challenges us to look deeper. The problem isn't the emotion itself. The problem is when we believe our thoughts too quickly without realizing they're being filtered through emotional history, fear, ego, or outdated beliefs. She gives a powerful insight here. Your mind is constantly narrating. It tells stories about what's happening, what it means, and what will come next. But those stories aren't facts, they're interpretations. And unless we pause to question them, we risk living inside a fiction of our own creation. So, how do we escape this mental maze? Denise offers a deceptively simple but profound first step: awareness. She encourages traders to develop the skill of metacognition, the ability to observe your own thoughts as they arise, not judge them, not react to them, just notice them. Because the moment you see the pattern, you're no longer trapped in it. Imagine this. You're about to jump into a risky trade. Your heart is racing. Your mind says, if you don't take this, you'll miss out again. But instead of acting, you pause. You ask, is this fear of missing out or a real opportunity? That one question shifts your perception. That's the doorway out of the labyrinth. Denise also points out that emotional mastery doesn't mean becoming emotionless. It means learning the language of emotion so that when fear speaks, you can listen without obeying. When doubt whispers, you can check its source. And when excitement surges, you can ground yourself before leaping. In the end, she reminds us that the labyrinth isn't the enemy. It's part of being human. But if you learn how to navigate it with awareness, curiosity, and honesty, you'll begin to trade not from fear, but from clarity. Because the real edge in markets, it's not in data. It's in how clearly you can see both the market and yourself. Chapter 9, The Ironic Holy Grail of Risk. Denise Shull opens this chapter with a truth that flips conventional trading wisdom on its head. The more you try to eliminate risk, the more at risk you actually are. Why? Because markets are not puzzles to be solved. They are emotional, fluid, and unpredictable environments. And trying to treat them like math equations leads traders into a false sense of control. That illusion? It becomes a trap. Denise introduces this idea as the ironic holy grail. While most traders spend their careers searching for a way to remove risk through tighter systems, stricter rules, or more data, the actual key lies in something most overlook: emotionally mastering uncertainty. She explains that risk isn't just a number or a volatility reading. Risk is your relationship with uncertainty, and the way you feel about the unknown is often more important than the unknown itself. Here's where it gets deep. Denise points out that most traders are secretly driven by a desire for certainty, a clean signal, a safe trade, a rule they can trust. But markets don't offer guarantees. So when that craving for certainty takes over, traders become rigid. They tighten stops unnecessarily. They miss good trades waiting for the perfect setup. Or worse, they freeze. This rigidity becomes a bigger risk than the market itself. Denise flips the script. Instead of fearing uncertainty, use your emotional responses to it as signals. Feeling nervous? Ask yourself why. Is it based on something real in the market or a past trauma? Feeling overly confident? Could that be a sign you're ignoring risk rather than managing it? The secret, she says, isn't to become fearless. That's a myth. The goal is to become emotionally literate, to recognize fear, doubt, and hesitation as meaningful data, not red alerts. She gives a powerful example. Imagine you're feeling uneasy about a trade. Most people think the emotion means don't do it. But maybe that discomfort is a signal to dig deeper, not to run, but to listen more carefully. Because the best decisions often come from a place of honest emotional awareness. In Denise's words, risk is emotionally managed uncertainty. That's it. That's the grail. And that changes everything. It means that managing risk isn't just about position size or stop losses. It's about how well you understand what's going on inside you when you're exposed to the unknown. It's about staying present, flexible, and connected to your gut without being hijacked by it. So the real edge? It doesn't come from defeating risk. It comes from embracing it with eyes wide open, guided by emotional clarity, not avoidance. And in doing so, you stop trying to conquer the market and start mastering the only thing you can control: your own perception of what risk really is. Chapter 10, Do We Ever Know What Tomorrow Brings? Denise Shull starts this chapter with a bold and honest truth. We don't know what's going to happen tomorrow. Not in life, and certainly not in the markets. And yet, ironically, our brains are wired to want to know. We crave predictability. We chase certainty like it's a safety blanket. Why? Because uncertainty feels uncomfortable. It feels risky, vulnerable, exposed. But here's the twist. The more we try to force certainty, the worse our trading decisions get. Denise explains how this psychological trap works. Our brain, especially under stress, starts creating stories, imagined outcomes, predicted results, false patterns, all to give us a sense of control, not real control, just the illusion of it. That illusion? It can be deadly for a trader. You start holding on to positions too long because your story says it'll bounce. You ignore warning signs because your mind whispers it can't go lower. You avoid cutting a loss because you believe the market should turn. None of that is based on what's happening right now. It's all based on a desire to avoid the discomfort of not knowing. But Denise urges us to take a different approach, one that's both more realistic and more powerful. She says, you don't need certainty to trade well. You need emotional honesty. Emotional honesty means admitting to yourself, I don't know what will happen next, and that's okay. It means accepting that even the best setups can fail. Even the clearest signals can reverse. And it means making decisions not from a place of fear or control, but from presence, from awareness. And here's where the magic happens. When you stop fighting the unknown, you move faster. You enter and exit with more clarity. You bounce back from mistakes without spiraling. You let go of needing to be right and focus instead on being aligned with yourself, with your strategy, and with the moment. That shift from control to awareness is what separates the pros from the amateurs. Denise reminds us that great traders don't try to know what will happen. They get really good at responding to what does happen. Because in truth, the market is always uncertain, but your relationship with that uncertainty, that's where your edge lives. So no, we never truly know what tomorrow brings. But if you can face that reality with honesty, self-awareness, and emotional resilience, then you won't need to know. You'll simply be ready. Chapter 11, Mental Capital and Psychological Leverage. Denise Shull introduces two concepts that are often missing from traditional trading education, but they're just as important as technical skills or risk management. Mental capital and psychological leverage. Let's break them down the way Denise does. Mental capital is the emotional and cognitive energy you bring to the trading desk. Your focus, your patience, your willpower, and your ability to make decisions under pressure. Just like financial capital, you can lose it. Every emotional blow, every stressful trade, every second guess, every fight with fear or frustration eats away at your reserves. And if you're not aware of that, you start making poor decisions without even realizing why. You take trades you shouldn't. You hold losers too long. You hesitate when you should act. It's not a technical mistake. You're simply drained. Denise is crystal clear here. If you're not protecting your mental capital, you're sabotaging your performance, no matter how good your system is. But she doesn't stop there. She introduces a second concept that flips emotion from being a weakness to becoming an advantage. That's what she calls psychological leverage. Psychological leverage is your ability to use emotions, not fight them, not suppress them, but read them, understand them, and respond to them intelligently. Imagine this. You feel anxious about a trade. Most people try to ignore it, or worse, push through it. But if you've built your psychological leverage, you pause. You ask, is this fear warning me about something real, or is it just noise from a past experience? That moment of insight, that's psychological leverage in action. You're not just trading a chart. You're using your own emotional responses as data. That gives you an edge no algorithm can replicate. And this is where Denise's work stands apart. She says, just like you manage your financial risk, you must manage your emotional resources. That means taking breaks when your mental capital is low, avoiding revenge trades when you're emotionally charged, not pushing yourself to be rational when your emotional circuits are overloaded. She emphasizes that emotional recovery is not optional. It's a core part of a real trading strategy. Because when your mind is depleted, your perception gets skewed. You see threats where there are none. You miss signals. You shrink from risk or chase it recklessly. But when your mental capital is restored and your psychological leverage is high, you become grounded, sharp, and flexible. You trade with awareness, not reaction. In short, the best traders aren't the most logical. They're the most mentally present. So protect your capital, both kinds, your financial one and your psychological one, because markets don't just reward skill, they reward emotional clarity. Chapter 12, Mark-to-Market Emotions equals Risk Management. Denise drops a powerful mental shift, one that can truly change how traders think about emotions. She says, emotions are your mark-to-market for the mind. Just like portfolios are mark-to-market to reflect their real-time value, your emotions give you a live update on your psychological position, where you really stand, not where you wish you stood. Let's make that real. You feel fear in a trade? It's not just anxiety. Denise says it might be marking to market your lack of clarity. You're hesitating? That hesitation might be highlighting unprocessed past losses, a trauma echoing through your current decision-making. You feel overconfident? That could be your mind marking to market some hidden emotional need for validation or revenge. See what's happening here? Emotions aren't just background noise. They're not distractions. They're data. Live, real-time psychological risk metrics. Denise's core message here is that if you suppress emotions, if you try to trade like a robot, you're actually ignoring your most valuable internal risk signals. You wouldn't ignore a portfolio drawdown, right? So why ignore fear or doubt or frustration when they spike? She teaches us to reframe emotions as feedback, not flaws. And just like with financial positions, this feedback helps you take action. Maybe you reduce size because your fear is telling you you're overexposed. Maybe you sit out because your anger is warning you you're still tilted from the last trade. Or maybe you double down, not from impulse, but because your calm focus confirms you're aligned. It's all about listening. Denise gives traders a new lens. Every emotion you feel in a trade is marking your mental state to market. And just like the market, that mental state fluctuates second by second. She's not saying to be ruled by emotion. She's saying, read it like a chart, study it, track it, use it. When you do that, emotions become risk management tools, not liabilities. And here's the real takeaway, the one that sets emotionally intelligent traders apart. You don't eliminate emotions to become great. You integrate them. You develop the skill to interpret them accurately and act with both awareness and flexibility. Because real risk management doesn't start on a chart, it starts in your own emotional truth. Chapter 13, Regret Theory, Greed Misleads. Denise Shull throws a curveball at one of the oldest trading cliches. We've all heard it, right? Markets run on greed and fear. But Denise says, not so fast. That idea? It's too shallow. She believes the true emotional driver behind most trading behavior isn't greed, it's regret. Think about it. When traders chase a stock that's already moved, are they being greedy? Or are they reacting to the regret of missing out? That gut-wrenching, I should have bought it earlier feeling? When a trader exits a position too soon or too late, is it really about fear? Or is it the fear of future regret? The possibility that they'll look back and feel they made the wrong call. Denise points out that most bad trading decisions don't come from raw fear or hunger for profit. They come from trying to avoid the emotional pain of regret. We try to protect ourselves. We want to dodge that awful moment where we feel stupid or ashamed or disappointed. So what do? We jump into setups we don't fully believe in, just to avoid missing out. We hold losers longer than we should, hoping to avoid the regret of selling the bottom. We play it safe or reckless or hesitant, not based on strategy, but based on the stories in our head about what we might regret later. This is where Denise brings in regret theory, a concept from behavioral psychology. It explains how humans often make choices not based on maximizing gain, but on minimizing future regret. And here's the kicker. The more we try to avoid regret, the more likely we are to feel it. So what's the way out? It's not to eliminate regret. That's impossible. It's to become aware of how the fear of regret shapes your decisions. Ask yourself in the moment, am I making this trade because I truly see the opportunity? Or am I acting out of fear of regretting not acting? That tiny shift in awareness can change everything. Because when you see regret for what it is, a shadow that follows decision-making, you stop letting it control your moves. Instead, you start trading from clarity, not emotional defense. Denise's message is simple, but deep. Greed is flashy, fear is loud, but regret is the quiet force steering the wheel, unless you take it back. So next time you feel that pull, that urge to chase or hesitate or fix a mistake, pause. Ask yourself what regret you're trying to avoid, because naming it is the first step to neutralizing it. Chapter 14, Fractal Geometry in Your Market Mind. Denise Shull introduces one of her most fascinating ideas, that your emotions are fractals. Yes, just like the markets. You've probably heard that markets follow fractal patterns, repeating shapes and behaviors at different timescales. But what most traders don't realize is our emotional lives do the exact same thing. Let's break that down. Fractals are patterns that repeat themselves over and over at different levels. A 1-minute chart can look like a daily chart. A small dip can mirror a large correction. Now imagine this, the fear you feel after 2 losing trades in a row, it might have the same emotional structure as the fear you felt 10 years ago, when you made a mistake, got judged, or felt powerless in some completely unrelated part of your life. It's not the trade that's triggering you. It's the emotional fractal underneath it, an old story repeating itself in a new shape. Denise says this is why emotional patterns feel so intense. They aren't just about this moment. They carry the emotional echo of everything similar you've ever felt. Let's say you're in a drawdown. You start to panic. You begin forcing trades, trying to get back to even. It feels urgent, irrational, even desperate. Why? Because you're not just reacting to today's loss. You're responding to an old emotional pattern. Maybe a time when you felt like you weren't good enough, or when you felt like you had to prove something to be safe. Denise urges traders to zoom out emotionally, just like they would zoom out on a chart. Ask yourself, have I felt this pattern before? Where else in my life does this feeling show up? Because once you start recognizing the fractals, once you name the pattern, you take back control. You stop reacting. You start responding with awareness and choice. This is powerful because now every emotion becomes a clue, not just to your current state, but to your deeper patterns. And once you see the pattern clearly, you can break it. You can pause. You can adjust. You can trade consciously, not compulsively. Denise believes that emotional self-awareness is the real edge. And in this chapter, she shows you how your own mind is structured like the very markets you're trying to master. In short, markets are fractal. Your emotions are fractal. And when you start recognizing those inner fractals, you stop being ruled by them and start using them to evolve. The rise of coup d'etat capital. Denise takes us behind the scenes into the world of elite traders. Not the ones trading from their bedroom, but the ones managing billions. Hedge fund giants, portfolio managers running institutional capital. The real deal. And what she discovered was surprising, even to her. These top-tier professionals, with all their resources, data, and experience, still struggled with emotions. Yes, even the best of the best. They doubted themselves. They second-guessed trades. They felt fear, frustration, regret, and pressure. But here's the difference. They didn't try to suppress those emotions. They got better at listening to them. That's the core message of this chapter. Real trading success isn't about perfection. It's about resilience. It's about recovering fast. And more importantly, it's about decoding the emotional signals embedded in every decision. Denise started working directly with these traders, becoming a psychological advisor, not just a coach. She created what she calls coup d'etat capital, not as a firm, but as a mindset. A revolution in how traders approach their inner game. No more pretending emotions are weaknesses. No more trying to think your way out of doubt. Instead, feel first, then interpret. Because every emotion you feel while trading, it's trying to tell you something. That hesitation, it might be signaling a deeper lack of clarity. That fear after a loss, it could be alerting you to a pattern from the past you haven't resolved. Denise's work with top funds proved a massive point. You don't outgrow emotions, you grow through them. She helped traders realize that speed of emotional recovery was the edge, Not who could win the most trades, but who could bounce back the fastest. Who could learn from discomfort instead of hiding from it. And here's the part that hits hardest. Even with billions on the line, the game is still personal, still emotional, still human. This chapter marks a turning point in the book, because now Denise isn't just explaining theory. She's showing us how those theories play out in the real world, at scale, with pressure, with skin in the game. And the takeaway is clear. Whether you're managing $100 or $100 million, your ability to recognize, interpret, and recover from your emotional states is what separates average from elite. That's coup d'etat capital, a quiet rebellion against the myth of the emotionless trader. A new kind of power, one built on emotional truth. Chapter 16, Quarterbacking a Portfolio. Denise opens this chapter with a powerful metaphor. Trading is like being a quarterback. Not a chess master, not a mathematician sitting in a quiet room, but a quarterback in the middle of chaos, noise, pressure, and constant motion. Why does this metaphor matter? Because it shifts how we think about decision-making in the markets. A quarterback doesn't have time to sit and calculate every move. They scan the field. They feel the momentum. They react with instinct, built on preparation, yes, but also on emotional attunement. Denise argues, the best portfolio managers aren't just following their models, they're reading the emotional field of the market. They sense fear, hesitation, greed, not just in themselves, but in the broader crowd. They feel the shift before the chart shows it. They know when something's off, even when the data looks fine. That's emotional agility. That's quarterbacking. She contrasts this with the old, outdated idea of trading like a chess player, someone trying to anticipate 12 moves ahead, thinking logically at every turn. That model is too clean, too mechanical, and frankly, too slow for the real market. Because markets don't unfold in neat little sequences. They surge, they fake out, they crash. News hits, sentiment shifts, and suddenly what made sense 2 minutes ago is now completely irrelevant. This is why Denise says you need to train your emotional intelligence as much as your analytical skills. A quarterback doesn't just execute plays. He adjusts. He scrambles. He listens to that gut feeling when a play breaks down. And great traders, they do the same. They recognize when a setup doesn't feel right. They trust that discomfort and either dig deeper or step aside. In fact, Denise believes that this emotional responsiveness is what separates great portfolio managers from average ones, because the data never tells the whole story. It never has. It's your inner signal system, built from memory, emotion, and meaning, that completes the picture. And like a quarterback, you must make decisions in real time, under pressure, without perfect information. So, if you've been trying to trade like a computer, this chapter is your wake-up call. You're not supposed to be a machine. You're supposed to be a high-performance human, tuned into your environment, your emotions, and your instincts. Trading is a contact sport. It's fast, it's messy, it's full of ambiguity, and it requires you to stay flexible, emotionally honest, and deeply self-aware. That's what quarterbacking a portfolio really means. And if you can step into that role with your full self, logic, and emotion included, you'll start playing the market with a whole new kind of edge. Chapter 17, Decoding What Was I Thinking? We've all been there. You make a trade, it goes wrong. And then, in frustration, you ask yourself, what was I thinking? But Denise says, hold on, that question, that exact moment, it's gold. Because right there, your brain is trying to reconstruct the emotional logic behind your decision. And that's where the real learning lives. She encourages traders not to ignore that question, not to rush past it, and definitely not to judge themselves for asking it. Instead, lean in. That moment is your mind's attempt to trace back the emotions, thoughts, and context that influenced you. So how do you decode it? Denise walks us through a process, almost like emotional forensic analysis. 1, go back and re-feel what you felt. Not what you think you felt, but what was actually going on inside you when you pulled the trigger. Were you hopeful? Afraid? Just bored? Feel it. Don't just analyze it. 2, reconstruct the emotional why. Why that trade at that moment? Were you chasing a loss? Trying to avoid regret? Seeking validation? These aren't flaws, they're clues. 3, spot the emotional bias. Denise reminds us that our trading actions are rarely just rational. Most of the time, there's an emotional undercurrent, fear of missing out, relief after closing a tough position, even subtle boredom nudging you to make a move. And the goal here isn't guilt. It's not about beating yourself up. It's about pattern recognition. Understanding the emotional blueprint of your decisions. Because guess what? Those patterns repeat. And if you never decode them, they'll keep showing up, quietly guiding your trades again and again. But when you do decode them, you start making trades from clarity, not compulsion, from awareness, not autopilot. That's how traders grow. They don't just study charts, they study themselves. Denise ends, emotions aren't noise, they're signal. Your past trades, especially the bad ones, are treasure maps. Maps that lead you back to emotional insights that no model or data set can ever reveal. So the next time you ask, what was I thinking? Pause, listen, rewind the tape, because that's where transformation begins. Chapter 18. Is that an impulse or is it implicit knowledge? You know that feeling, a sudden urge to enter a trade, a quick decision that feels right, but is it intuition or is it just an impulse? Denise Shull digs into this critical difference, and let's be real, it's not easy to tell the two apart. Both impulse and implicit knowledge come fast. Both can feel urgent, but only one is rooted in experience. The other, it's emotional static. So what's the difference? Let's start with impulses. They're emotionally charged. They arise out of fear, excitement, stress, or even boredom. They demand action, and more often than not, they lead to regret. Then there's implicit knowledge, the stuff that lives deep in your bones. It's the pattern recognition your brain has stored over years of experience. It's that subtle, this setup feels like trouble vibe, or the calm certainty you feel even when others are panicking. And here's the challenge. They feel almost the same. Denise says you can't always trust your gut unless you've learned how to listen to it correctly. So, how do you build that skill? She introduces a simple but powerful solution: journaling. Not just writing down trades, but recording the emotional context around them. What were you feeling? What did you notice internally and externally before you acted? Was there tension, urgency, calm, clarity? Over time, patterns emerge. You start to see which of your gut feelings were actually wise and which were just emotional noise. Denise stresses this is how you train your intuition. Not by suppressing emotions, but by studying them. It's like tuning an instrument. The more you listen to your internal signals, the better you get at spotting the difference between a helpful note and a loud, off-key alarm. She also reminds us that implicit knowledge often comes with calm confidence, not adrenaline. It feels like clarity. It doesn't scream, it whispers. That's your signal. So the next time a trade idea flashes across your mind, pause. Ask yourself, am I acting from clarity or compulsion? Is this wisdom or worry? And if you're not sure, write it down. Track it. Learn it. Because your best trading edge may not be in the charts. It might be in your emotional pattern recognition. And that's what Denise wants every trader to realize. Your feelings aren't the enemy. They're your map. You just need to know how to read them. Chapter 19, Run Over. Every trader has that day. The one they never forget. The trade that went sideways. The position that spiraled out of control. The moment the market didn't just beat them. It ran them over. This chapter is raw. Because Denise Shull isn't talking about strategy anymore. She's talking about pain. The kind of emotional trauma that lives under the surface long after the chart is closed. She calls it out plainly. Trading trauma is real. And it doesn't just disappear. When a trader gets run over by a bad loss, a frozen moment, a blown up account, something shifts inside. Confidence takes a hit, but it's deeper than that. Unprocessed emotional wounds start driving behavior. You start second-guessing good trades. You hesitate when the setup's clean. Or worse, you overreact, trying to prove you've still got it. Denise says this silent emotional damage often becomes the hidden force behind our worst decisions. Because when you don't deal with the trauma, it deals with you. So what's the fix? Not suppression, not powering through. She urges something rarely talked about in trading circles: healing. Healing starts with reflection. Not just remembering what happened, but re-feeling it. What did it mean to you? What did it change in you? Then comes dialogue, whether it's with a coach, a friend, or even just your journal. You've got to bring that story out of the dark. Name it. Face it. Finally, there's emotional processing. Giving yourself permission to admit, yeah, that moment hit me hard. I'm still carrying it. Only then, says Denise, can you start to reclaim your mental capital. The emotional energy and risk-taking courage you need to perform at your best. She reminds us, markets are brutal, mistakes are inevitable, but trauma doesn't have to be permanent. Traders don't need to be invincible. They need to be resilient, and resilience doesn't come from ignoring wounds. It comes from understanding them and growing stronger in the process. So if you've ever been run over, you're not weak. You're human. But if you learn from it, if you face the fear and mind the lesson, you'll come back with something even more powerful than a winning trade: emotional clarity. And that's where your real edge begins. Chapter 20, the What Was I Thinking rehash. We've all asked it. What was I thinking? Sometimes it comes with a sigh, sometimes with frustration. But in this final chapter, Denise Shull tells us something powerful. That question, it's not a sign of failure. It's your most valuable teacher. Denise urges you to shift your post-trade reviews from just profit and loss to something more meaningful. What was your emotional state at the time? What was your thought process? How were you perceiving risk in that moment? It's not about judging yourself. It's about understanding yourself. Because when you build that emotional awareness, you stop operating like a robot and start performing like a pro. You begin to see the roots of your hesitation. You recognize the subtle fear under your confidence. You notice the leftover tension from a losing streak and how it's coloring your decisions in the present. Denise says this kind of review, honest, emotional, and consistent, is how you develop emotional intelligence as a trader. It's how you go from reactive to intentional, from repeating old patterns to rewriting your playbook. And over time, something amazing happens. You begin to trust your instincts, not because they're perfect, but because you've studied where they come from. You begin to listen to your emotions, not as distractions, but as signals. You begin to see your internal landscape with clarity, and that changes everything. This chapter closes the loop. It shows you that trading mastery isn't just about market knowledge or technical skill. It's about knowing yourself, deeply, truthfully, courageously. So next time you ask, what was I thinking? Pause, look inward, and let the answer become your edge. Because in that question lies the blueprint for smarter decisions, stronger confidence, and the emotional freedom to trade at your highest level. It's the part no one likes to talk about, the aftermath, the silence after the storm. When the trade goes wrong, when the drawdown eats at your confidence, when you're sitting in front of the screen, but your mind whispers, can I really do this anymore? This chapter is about that moment. Denise Shull brings us face to face with one of the toughest parts of trading, re-entry. Not into the market, into yourself. Because what keeps most traders sidelined after a mistake isn't just fear of losing again, it's shame, it's doubt, it's the emotional fog that clouds judgment after we've been bruised. But Denise says, you don't have to be perfect to come back. You just have to be whole. Recovery isn't about rushing into the next setup, it's about emotional reintegration. Here's how she breaks it down. 1, acknowledge what went wrong without shame. You made a mistake? So what? You're human, and that mistake holds information, not judgment. 2, reflect emotionally, not just logically. Don't just analyze the chart. Ask yourself, what was I feeling when I clicked that trade? Was I acting from fear, frustration, revenge? This emotional X-ray gives you real data, the kind no chart ever will. 3, start small. Rebuild trust in your instincts. Just like rehabbing a physical injury, emotional recovery takes patience. You don't lift the heaviest weight on day 1. You start light, you test, you listen. Same with trading. Ease back in, gently. Trade smaller. Focus on process, not outcome. Let your instincts breathe again. Because the real win? It's not avoiding mistakes. It's coming back from them, wiser, stronger, and more self-aware than before. Denise closes this chapter with a powerful truth. Resilience isn't about never falling. It's about how you rise. So if you're in a slump, if doubt has crept in, if the market has knocked you flat, don't stay down. Get curious. Get clear. Get back in the game. Not to prove something to the market, but to reclaim your power from the inside out. Chapter 22. Take it to the next level. This is it, the final chapter. But it doesn't feel like an ending. It feels like a beginning. Because Denise Shull isn't just asking you to trade better, she's inviting you to live better, feel deeper, think clearer, choose wiser. She asks the real question: can you feel everything without letting it control you? That's not a soft, feel-good quote. That's the core skill of elite performance. You see, most people spend their lives trying to escape emotion, ignore regret, suppress doubt. But traders, we don't have that luxury. The market is like a mirror, reflecting back our inner world with every tick, every loss, every hesitation. You can't fake your way through it. So what's the next level? It's not a secret system. It's not another indicator. It's not even about the market. It's about emotional fluency. It's knowing when your hesitation is intuition and when it's fear. It's seeing when your confidence is earned and when it's ego. It's being able to sit with an emotion, even the ugly ones, and mine it for gold. Denise puts it beautifully. Trading is a mirror. The more you understand yourself, the more you understand the market. She's not being poetic. She's being precise. Because the edge you're chasing, it's not out there. It's in you. And that's the power of this entire book. It started with the idea that emotions were the problem. No, emotions are the guide. Fear? It's not weakness, it's information. Regret? It's not failure, it's feedback. Joy, anger, confusion, they're all part of your internal risk radar. The final message is clear. Master yourself, and you'll never be lost in the market again. This is your next level, not just as a trader, but as a fully aware, emotionally agile, high-performance human being. And that brings us to the end of this powerful journey through market mind games. If this book taught us one thing, it's that the market doesn't just test your strategy. It tests you, your emotions, your mindset, your ability to stay honest with yourself in moments of uncertainty. Remember, it's not about being perfect. It's about being aware, being resilient, and being human. If you found value in today's video, make sure to like it, share it with your fellow traders, and most importantly, subscribe to the channel for more deep, thought-provoking content like this. Your support keeps this journey going, and we're just getting started. Thanks for watching, and I'll see you in the next one.